Hey guys, it's Will. Hopefully you're having a great day today. So APLD is up, and while most investors might be lagging looking at yesterday's news, we've locked in over 75% on APLD in our long-term positions, and this isn't luck. The results that we've been spotting here have been moving before the revenue even hits. And here's the thing, trading stocks after earnings and finding the moves before the revenue hits is one of the easiest ways to make money in this market. It seems that I'm finding it's only attainable when using the Prophecy AI, my 21 step analysis. I can search up APLD. It's the only place that uses real time data to supercharge the AI models. So I did a full reveal of this yesterday. If you want to start using AI in your investing to simplify things, it's the first link in the description down below to have a look. But here's what happened. We saw APLD coming up on their earnings, and they already announced in multiple contracts that they had signed over $15 billion in data center constructions. And so we already knew this was going to happen. We already saw the revenues hitting the contracts, and it was really just a matter of time before it showed up on the balance sheet and on the revenue. And so recently they just reported earnings, and you can see some of the projections from Prophecy app. We had $40 price targets, $38 into the next week. And maybe, is there any pullbacks? No, pretty green. Maybe the next hour, a little bit of a pullback. I mean, they're up 17% today. So maybe, Prophecy is saying, slight pullback today after that 17% run. But look at that. Into the next month, into the next year, $50 price targets. And in fact, we just released earlier today, or not today, last week, before their earnings, we did a release in stock meets. This was before their earnings. And our projections, now that it's out, I can share with you. Before it was out, it's only available to StockMate members. If you ever want to tune on in there, second link below. But look at this, 4 days ago, we're looking mid 30s was our expectation. Bullish targets were actually $39 to $45 a share is what I was anticipating. As here's what's going on. Their revenue came in on Wednesday when they reported earnings. And when they came out with that revenue, they came out with that revenue. They actually increased their revenue from $64 million last quarter to coming in here. If we go to their investors, go straight to their earnings release, of $126 million they came in with in this quarter, and then narrowing that net loss down to 31 million. So if you look at the increase, that's a 250% increase in revenue. The balance sheets increased, they're over 2.4 billion. And shortly after, we actually traded them. Some of you guys saw we bought the dip right on the earnings call. Actually, we were trading them. It was right here. We bought the dip right at earnings, around $28 a share. So if you guys are okay being around cooking, no worries. It's a nice sound, right, to hear some carrots being chopped. When it comes to this buy on the dip at $28, we were anticipating they would recover. We did end up selling at a market open session on January in our short-term positions, but continued to hold our long-term positions, and even traded it this morning in our daily live trading session, which we ended up getting out on a kind of a note that we might see it sell down. Prophecy was still a little bit bullish, and I probably should have just listened, but hey, regardless, we were in it, and we are in it in the long term as it's continuing up to $37. So here's what we got going. The market, this is broken down into, there's really about 21 stages, and I could break it down into 7 stages, but we'll just go with three steps, and I'll give you, the 7 stages here. First, you got the first step, which is the market. If you look at the growth in the AI data center market, you got NVIDIA building more, you have Apple investing more, Microsoft investing more in the data centers, and we just see the revenues coming in. This was their revenues of $15 billion over the next few years as a result of their partnership with CoreWeave. And there's also some other companies they're working with that haven't fully been disclosed, but are seen or categorized as hyperscalers, which is a pretty good sign. And obviously it's showing up on the revenue. And so the market's growing. We see a lot more money going to the data centers. Is the real world usage catching up? Yes, it is. I just went to CES this last week. I could tell you AI is seeing more usage. There's a reason demand is there and data centers are growing. Demand's not the issue. In fact, the issue is, finding the talent, finding the people, getting the timelines and the execution on track. And that's what they said in their earnings call. They said, we don't have any problem with demand. We're seeing tons of demand. And you can see that in reflection of the value that they're creating because their revenue has been increasing. But overall, real world usage, check. So on the market side, hype is there, revenues are there, profits are there, but also real world usage, check. We see that right now. I even have some good messages from you, different subscribers here on the channel that work at APLD, even Applied Digital, who have said that the constructions are going well. So that's always cool to see. But then you get into step number 2, which is the analysis. So again, financials look good. Market cap holding about 10 billion right now. If they've got 15 billion in the pipeline, they're seeing the increases they have currently. We're anticipating that they could be a $15 billion to $20 billion company. But with the surge today on the way up to new levels, we may see some corrections. And that's kind of what we talked about in this next hour or so. We'll see how it reacts here. You can see currently there are some levels to watch as right now it's broken out. You can see here. So now we're kind of getting financials look good. Balance sheet looks good. They don't have any more debt than their assets. And we were projecting about a 75% increase over a 2-week period. When do you have that? Not very often, but this year and last year seems to be happening already quite often. When you're projecting 75% increase over the course of 2 weeks, it's pretty tremendous. So anyway, out of that 75%, we saw today that they did gain about 57% just over the last few days. It was that 4 or 5 days. They've gained about 57%. So now that they've surged up to here, the technicals indicate they just broke out above this previous resistance level around $35 a share. You can see that level here. And then next level of resistance, again, if they continue up, it's going to be around that $40 a share. So currently, nearest support levels seem to be right here. You're going to be watching this kind of zone around this previous resistance around about $35 a share. So we may see them potentially pull back into those levels if they just can't sustain all of the momentum. You look at the RSI, look at the MACD, everything's way overbought at the moment. Not necessarily an indication it's going to reverse, but it is an indication that you'd have to be ready for a potential sell down to that $35 support. So you got a previous resistance around $35 that may act as a support level. So watch that. And then the longer term potential increase, we take a look, you're looking up to about $40 a share, which would be from here about a 10% increase, a little bit less than that, of 8 or 10% increase potential. So in the short term, you got that potential upside of about 10%, but they could price in around $50 to $100 if things go well. But here's the deal with that green, 18% in a day, just as surely as it could go up, we could see the reversal happen as well. And so watching that $35, $36 previous resistance as a support will be key. So that's how the technicals look. We got to go over, 4 stages so far. We went over the usage and the financials in the market, and then getting into step number 2, went over the financials and then the technicals. And then finally, this is the news, stage number 5, which is the third step, or the A, B, and C, technicals, financials, and then news, which is the C of step number 2. The news has been good. Nothing crazy. You got nothing that's indicating any red flags. In fact, they've had 15-year lease with CoreWeave. That's been an article we've gone over numerous times. They've had some investments in companies related to liquid cooling to improve their processes. But ultimately, they've raised good money. They've had more AI data center builds than we've ever seen before. There's a $5 billion AI factory lease with a US-based investment-grade hyperscaler. You got $5 billion in funding ahead of that, and then you had another $3 billion towards their build out in North Dakota for national AI infrastructure. So the infrastructure is there. The big companies are obviously investing. And then when it comes to their news, you also see them doing it fairly strategically. They have the liquid cooling. One thing they talked about on their call, their earnings call, was that they made some mistakes with some data centers in the past. For example, that they didn't get the source of the workload or the point of generation for the power, the energy, perfect. And they wanted to do better. They wanted to get it even more efficient. And that they were planning to do that with these new data centers. And that they already saw some different opportunities, new opportunities that they could potentially use the solar or the wind turbines. But uniquely, what they do is they're building data centers in a very cold place rather than in a hot place. So some data centers, a lot of data centers, are being built out in where? Austin, Texas, or Phoenix. It's really, really hot and it gets humid. And so ultimately, that's why they have an advantage building in the cold. So when they put in these NVIDIA or Dell or Intel or Hewlett Packard types of infrastructure, super microcomputers a partner, they're going to see a lot of energy and it's going to take a lot of heat or put out a lot of heat. But if they're in a cold place, then they kind of have the cooling almost like a second layer that takes care of the hot output from some of that computing. So it kind of saves on costs for that instance. So now we're getting to stage number 3 or step number 3, which is the profit and the plan. So when it comes to the Prophecy AI, I was looking at some of the projections from Grok and Claude. You got bullish indication, some corrections due in the next few hours and into the next day potentially, but into the next week, we get into next week looking bullish into that high 30s to potentially up to $45 to $50 just in this next quarter to next few months. So nearest support level, when you're looking on the near term here, you're going to see that $35 support. And so watch that level as a support, very important. And then when it comes to the time frames, we got all these Grok projections for the stock. We could actually run it through Quantum. Let's do it. I'm going to go with Rigetti stock or Rigetti Quantum analysis, and let's see which time frame is feeling the most confident according to the quantum computer, or according to the quantum analysis that we're doing here. And let's see if it loads up. It might take a little bit. Above that $35 price point, around $38 to $40 is what it looks like for the next week, with 78% quantum confidence. So yeah, we'll see if that confidence plays out. Quantum analysis, that was using Rigetti, and the second best time frames were the 1 day, so a little bit slight corrections potentially, and then the 1 month of about not so much confidence there. That was using about 64 shots, 100% stability while loading up with Rigetti there. So when it comes to using AI for your analysis, again, I am looking at the plan here, the resistance. We're looking for that profit to continue long term. I'm going to hold it. But one thing to note as well, there was 3 steps we went over today for the analysis of APLD, and we've been covering it since about $3 a share. We've been holding it for quite some time now. And if you're here, you're looking to find the next growth opportunity just like APLD, and you want to take care of your portfolio in 2026 and grow it for whatever reason, whatever your goal is, realize that, I have a 21 stage process. We went through 7 just now. The risk to reward at the end, the last 2, we're looking at support there with resistance, potential 2% drawdown with a 10% increase. And this is my trading system. This is what I do. This is what's allowed us to gain over 100% on multiple stocks this year. If you want new revolutionary AI tech that takes all of my systems, puts them into one system in one place with all of the best AI models in the world, Grok, OpenAI, Claude, and Gemini, then right now you can avoid some analysis paralysis, get some quicker analysis, and grow your portfolio. It's one of the best ways to find these types of stocks and find good opportunities in the first link below. If you'd like to tune on into our second link below, it's going to be our daily live trading, but you get daily live trading every morning for free when you get the Prophecy AI in the first link below. So I'd encourage you to simply have a look. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next one. Take care. Wow, baby, that was